Today's episode is brought to you by FinQuery. Stop the month in scramble with FinQuery. Built by accountants for accountants, our AI-enabled platform automates the manual workflows and complexities of accrual, prepaid, and lease accounting. Trusted by 40,000 accountants to streamline audits and strengthen internal controls. Close faster and more accurately today at finquery.com. Welcome to Count Me In. I'm Adam Larson, and today we're diving deep into one of the most persistent challenges accounting and finance professionals face, the month-end close process. If you've ever felt overwhelmed by endless spreadsheets, manual reconciliations, or hunting down missing accruals and prepaids, this episode is for you. Joining me today is David Buchanan, a product leader at FinQuery, who brings not only a wealth of experience from the audit world, but also expert insight from the forefront of accounting automation. Together, we'll break down why the month-end close can feel like a chaotic scramble, how legacy processes can leave teams stuck with stale data, and real risk of missing key expenses. More importantly, we'll explore how AI and automation are changing the game, moving teams from the last to know to being proactive partners in the business. So if you're looking for practical tips on streamlining your close, strengthening internal controls, and making a shift from manual to modern, stick around. Let's get started. Well, David, thank you so much for coming on the podcast. Excited to have you here and excited to talk about financial close and the processes that our accountants and finance professionals can work better and do better. And the way I wanted to start the conversation is walk me back to when you first started seeing the financial close process up close. Because when you just get into accounting, sometimes you get little parts and little bits of it. And then, what did that monthly grind actually look like for accounting teams, and what made you think, hey, there's a better way to do this?
Yeah, absolutely. And thanks, Adam. It's good to join you today. Appreciate the opportunity to talk about accounting. So yeah, as far as the month end grind and everything that you mentioned there, I'm a former auditor. I was an auditor at EY for some years, and I think my first exposure to the financial close process really came from that, right? We would walk through the process itself, map out entire close cycles for certain accounts. I was involved in receivables, cap software, debt, fixed assets, and some others. And, really what you start to see is the traditional month end close is really defined by like a chaotic scramble, right? We're trying to capture
Mm-hmm.
the financial activity that occurred weeks prior. So that grind really begins with like data collection, for example, right? We're like relying on email threads, trying to find certain emails, manual ERP exports where there's, a risk of omission. And then also reconciliation. That's a big one, right? Mapping the GL to certain statements in Excel, flagging discrepancies always results in slower close cycles, and also things like period cutoff. Let's make sure that transactions are dated correctly and, supported by appropriate documentation. So the reality when you dive into it is that the process tends to be, far from disciplined, right? And teams are frequently facing bottlenecks, waiting for that external data to finalize things. And for a lot of people, the realization is there has to be a better way, right? Because
Mm-hmm.
we tend to, these obstacles are recurring, and they're systemic. So even a typical manual close can, last more than ten business days, right? And that leaves executive leadership, relying on stale data, right? That should be used for strategic planning earlier. So kind of being in that audit environment and seeing that up close is where I really started to see there has to be a better way to do that.
Yeah, there has to be. And when you think about the close, a lot of times things that kind of get hung up are things like accruals and prepaids. What does that process look like for most people, when they're really honest about what that looks like? Because it's probably a thorn in some folks' side.
Yeah, absolutely. Accruals and prepaids is a big one, right? Not
Yeah.
super technical accounting, right? It's not like other areas of accounting, but it can be very tedious and can really drag out close, right? That's a good question. I mean, I think starting with prepaid expenses, what does that process typically look like, right? Typically, organizations are waiting for those invoices to come in through the door through their AP process, and at that point The AP clerk codes that to the prepaid asset account. And at that point, we know, okay, we have a prepaid asset. And then, what we've seen is typically at the end of the month during financial close, that's when you have a staff or a senior accountant pick up all those invoices that were coded to prepaids. And then they have to manually open up their large prepaid Excel workbook with tons of tabs and rows and sort of type in the invoice number and vendor and, create the calculation to set up straight line amortization. Like, again, this is not complicated accounting per se, but it's tedious to maintain that workbook, especially if it's large, especially if you have an acquisition and you're taking more prepaids on the books. And, in today's day and age, there's a lot of SaaS agreements out there, right? And those SaaS agreements tend to be prepaid arrangements. So it's very easy. My point is, like, it's very easy for that workbook to kind of balloon, very quickly. And that becomes something difficult to maintain. Some other things that come to mind related to prepaids is, even if you set up a recurring journal entry in your ERP, you got to reconcile that back to your workbook. And if there's any variances, you have to deal with that. And, oftentimes invoices come in late. That's very common, right? Prepaid invoices come in late, and that necessitates a catch-up entry, right? Someone has to calculate a catch-up entry. Hey, we weren't expecting this. Let's catch up expense and set up the remaining amortization moving forward. Another thing that comes to mind is sometimes the AP team is not as familiar with what is a prepaid and what is not a prepaid, right?
Hmm.
So they might just see that invoice and code that entire thing to expense, and they're sort of miscategorizing that spend and taking all the expense at once. And typically you don't find that until like the last day of close in your flux analysis. And then you have to go in and do a manual reclass and set up amortization for that. So there's just a lot here that can slow down close. And, it's 2026. There's better things that we can be doing with our time than
Yeah.
taking care of prepaid expenses. Right. You also asked about accruals, Adam. And on the accruals side, that tends to be a little bit more complex in the sense that, we're on the hook to make sure that expense is recorded as it's incurred in the business, even if we haven't made that payment yet. So from the prepaid standpoint, we get an invoice as the trigger. Okay, let's do some accounting. From the
Yeah.
accrual standpoint, there is no trigger, right? So that's difficult because we need to go figure out, okay, what was contracted in the business this month? What was signed in the business? What spend was initiated? Otherwise, we don't find out until months later when the late invoice comes in or the in arrears invoice comes in. We realize, man, we need to book a huge catch up for this. Not fun to escalate that, right? So that tends to be some of the, when you talk about the process, that's what we've typically seen become very time consuming for both prepaids and accruals.
Yeah. Well, and with accruals, sometimes the only way you can see what it's for is some note, like somebody's note in a spreadsheet somewhere locked away in one of those tabs of those massive spreadsheets you were talking about. And then
Right.
having to hunt that down can be a huge headache for, especially when your month end close, you're trying to close the books and you said it can take up to 10 days. You're 10 days into the next month where you're supposed to be already doing your next month's work.
Right. Exactly. Absolutely. There has to be a better way.
There has to be a better way. And then you just mentioned, especially when something like an accrual kind of slips through, then that can be on the onus on the organization trying to catch up or trying to put money where they weren't planning for. And then suddenly other books are put off or you can't pay other bills. And so it can
Right.
balloon to this huge thing.
Absolutely. Yeah, really. I mean, there's a lot of like consequences to missing accruals, right? I think you mentioned
Hmm.
some of them. And thinking about, we've studied at FinQuery, we've studied this process a lot, especially in the past months related to prepaid expenses, accrued expenses. And we found that companies handle this hunt for missing accruals different ways.
Okay.
So yeah, so what we've seen out there is like, sometimes they'll do like a manual reconciliation during financial close where they have like, okay, here's all my open POs, all my open purchase orders. Here's all my AP transactions and invoices that came through the door, and sort of literally doing like a VLOOKUP in Excel to figure out, okay, this one matches, this one matches. Okay, these five were missing, and now we need to book an accrual for that, right? But that typically involves, involving IT, data. It's just a lot of work, a lot of headache to do that during close, especially. Another way that folks like try to look for that is some will even extend their close, right? So they'll add like a few days to close in hopes that, hey, if we just add a few days, hopefully these late invoices will come in, right? In the days that we've extended and we can book according to actuals. But like nobody wants to do that, right? Nobody wants to
Mm-hmm.
extend close. Super stressful time. Like we want to be done and go home, right? So that's another thing that we've seen out there. I would say probably the last way that folks handle this that I've seen a lot of is relying on that flux analysis, right? That expense trend analysis. And that's typically done on the last day of close where we're sort of like, okay, what is expense this month? We're comparing that to the prior month. If it's way less than the prior month, and we realize, hey, we probably missed an accrual here, right? We're probably missing
Mm-hmm.
expense. And we talked to someone, Adam, who found a very large missing accrual through that process that would have caused them to break their debt covenant, actually, which
Yeah.
is crazy. I mean, you do not want to break your debt covenant, right? So yeah, there's a lot of consequences to that. And if we're solely relying on like a manual flux analysis as some backstop control, it we're not going to find everything. It's not that reliable. And thinking more of some of the consequences that you mentioned, right? Like those large catch up entries, not good, right?
Mm-hmm.
Not good for forecasting, not good for budgeting, planning, strategic decision making. And then, from an audit standpoint, one of the procedures that auditors need to do is something called the search for unrecorded liabilities, right? That's like a foundational audit procedure where they're like, okay, we're looking at year end or quarter end, and I'm going to look at all of the subsequent disbursements. I'm going to look at all the cash payments in the next month and determine, are these cash payments related to a product or service that was actually used in the prior month? And I should have recorded an accrual for that, right? So those sort
Yeah.
of like cutoff procedures. And, I remember doing that as an auditor, and, a lot of the times things are missed, right? And so even I'm thinking of a statistic like the Center for Audit Quality found that about 30% of restatement announcements are from the wrong accounting for accruals, reserves, and estimates. Those are cited, most frequently. So this is a very sort of common thing, and ultimately a restatement is a consequence we don't want to deal with financially or toward our reputation. So anyways, there's a lot there, right? There's a lot there that we don't want to get into.
Yeah, for sure. Well, and then thinking about prepaids, you mentioned a lot of stuff about prepaids, but when you and I were first chatting before this conversation, you had mentioned, a lot of times accounting is the last to know. And
Right.
I think people who are listening to this conversation would resonate with that. And maybe help me understand kind of what does it look like, when you think you've got things under control and then something like catches you off guard because by the way, we prepaid this and like, wait, what? You know?
Right. Yeah, yeah, absolutely. I mean, we see that all the time.
Yeah.
At FinQuery, we deal with lease accounting automation, accruals and
Yeah.
prepaids, fixed assets, debt, and I would say it's across the board, right? This is like a common thing. Like accounting is always the last to know. Unfortunately, a lot of that comes from, like you think about a contract that is signed in the business, accounting is not really looped in, right? It's sort of like, yeah, someone like marketing signs a contract, they need a SaaS arrangement or whatever. Maybe they involve legal, redline the contract a little bit, right? Involve IT. But then that contract gets parked away in a shared drive somewhere, unbeknownst to accounting, right?
Mhm.
And that's true with new spend, with amendments to existing leases or, whatever it is. And then as accountants, we get this invoice come through AP a few months later, and it's like we throw up our hands, and it's like, no one told us about this. How are we
Yeah.
supposed to account for this? Now we need to book a big catch up, or we need to, open our books and change something, true up something. So yeah, it's certainly a common theme that we find amongst accountants that sort of catches them off guard.
Well, and then somebody said will say, "Oh, well, we put all our spreadsheets on PowerPoint. Version control's all taken care of. We don't have to worry about that. We can share everything because everything's in SharePoint, or whatever cloud service you're using to share your spreadsheets." What is your response to that kind of an approach?
Yeah, look, I mean, um, yeah, when we're talking about like version control software, you're still using Excel. You're just parking it in a place that you can see, who made changes to that. So it's sort of like a sturdier shelf, but you still have like a broken product in a sense, right? And that's, we all
Yeah.
love Excel as accountants. I don't want to, Excel is extremely flexible, but you're trading flexibility for a lot of risk, right? With Excel, there's like a lot
Hmm.
of risk for human error. There's a lot of risk because there's not an immutable audit trail. Like I could get everything perfect and someone comes behind and fat finger something or adds a row and it messes up my formula, breaks something, right? And again, it's not a standardized systemic process at that point. It's flexible, but it introduces a lot of risk, which tends to issue in weaker internal controls, right? More human error. So even with that version control is not automating accounting processes, right? It's just sort of some cloud storage and some, solid versioning there. But we really want to drive at how can we improve and automate the accounting process itself so that we're not reactive, we're proactive, right?
That's hugely important, and we've been spending a lot of time talking about the problem, and I think everybody who's listening to this conversation is like, "Yeah, we know the problem." So let's
Right.
maybe talk about some solutions because, things like AI and automation have really kind of changed the equation when it comes to these manual processes. So maybe we can talk a little bit about, what it looks like when a team moves from that manual to, from that reactive to the proactive kind of system-driven processes for these things we've been discussing.
Yeah, absolutely. Good question. And I mean, we live in an exciting time, right? AI,
Mhm.
agentic automation really transforms the close process and moves us closer to a 0-day close, right? That is like that's the gold standard. That's what we want to get to, right? A sort of continuous close, a 0-day close. And leveraging AI, sort of changes us from reactive and historical record keeping to proactive, real-time insights, right? To drive the business, harkening back to that phrase we just talked about, Adam, about accounting is the last to know. I'm just, thinking about
Yeah.
that. Like system driven AI changes that. And the way that it changes that, like I'm thinking of an example with us at FinQuery. We recently released what we call our global inbox feature. Okay. So
Okay.
the idea is like we talked about, anytime spend is initiated in the business, right? That contract is being sent to legal or to IT. If you just CC FinQuery in that byline, it gets sent to us, right? And AI gets to work setting up this record. So now accounting is aware of this spend from the outset, right? And it's like, this is a place where we can set up expected payments, expected expense schedules, account numbers, allocations, renewal alerts, things like this that are helping us be proactive, right? Instead of realizing that we have this new spend when that first invoice comes in with zero context, right? So sort of kind of catching it proactively at the front end. We've also introduced something called auto payment reconciliation, where it's like, hey, now that we have our contracts in the system, we know what we're expected to pay. So there's not,
Yeah.
that sort of eliminates like the hunt for those missing accruals, right? We're not like manually matching that. It's like, hey, the system lets you know, it flags, hey, you're expecting these payments. And then the system can sort of match what's expected against what actually came in and can true up your expense schedules, reconcile those variances. And for things that didn't come in, quickly defer it to the next month, right? And an accrual is booked. And once it comes in, it's trued up and there's an audit trail. So these are ways that we can sort of pivot from being very reactive to very proactive, right? Catching things at the front end and using AI to automatically match what's expected versus what actually came in. reconciling those variances, recording accruals for what's missing to help us out during financial.
And that all sounds amazing, but what does that, what does that transition look like? Because, if you're used to it one way, and accounting and finance professionals are wonderful people, but we can be very set in our ways sometimes. And so, what does that look like as you're as because you've worked with a lot of teams making that transition. What does that look like for them?
Yeah, and yeah, another great question. I mean, yeah, we're used to our processes. We like our processes, right? But I would argue the process is the way it is because there was not a better system that was
Okay.
available, right?
Sure.
So when you think about that, like reversing, I'm thinking about reversing journal entries, for example, for accruals, right? Where, okay, we realize something what is missing, we book a reversing entry, um, you know, but there's some issues with that, right? Which is like it's very difficult to tell if I'm looking at a whole listing of reversing journal entries. Like it's hard to tell what came in, what's still outstanding, what the true up was, right? Because it's sort of buried in reversing journal entries versus a system that there's a schedule that lays out for you. Here's the actual that came in. Here's what we hit expense with. Oh, it didn't come in, so we deferred it and recorded an accrual, right? That sort of tells the story of what happened instead of that being buried in an ERP as reversing journal entry. So that's an example of a very common process that there wasn't really a system to handle that a different way before, right?
Yeah.
Now, but AI sort of opens up the door where we can have more control and we can be more proactive and we can tell the story better and it's easier to audit and it's easier to see what's come in versus what hasn't come in and our variances moving forward. So my advice, Adam, would be, in this, you know, agentic age, if you will, is to kind of take stock of what are our processes today. Where do we
Yeah.
find ourselves being surprised? Where it's like the invoice comes in again, I'm the last to know, I wasn't aware of this. Does that happen often? Are we booking catch ups often? Sort of pinpointing those pain points in the process and then taking a look at some automation, even through software, right? That can help us sort of take care of these very common pain points. Maybe before we didn't realize that there was an option out there, but there is options out there, right? That helps to automate these processes and get us past this and closer to a 0 day close.
Yeah, I like that approach of, just because it's the process we've always done doesn't mean it's the best process. And also, it was the process because there was nothing better at the time. And when you
Exactly.
take that mindset, it kind of outweighs the, oh, this is all the way we've always done it. Well, it's the way we've always done it because there was nothing better. So let's find
Right.
something better so that we can do this better.
Exactly. Exactly. I'm thinking of one, I've been talking to a lot of customers lately, like you mentioned, and one use case that they always bring up is like, I have something that I prepaid. It's on my prepaid schedule and it falls off my schedule. I try to find out from the business if it's going to be renewed. This is very common, right? I'm trying to find out, hey, is this thing going to be renewed or not? And maybe, they don't get back to me in time or they tell me, yes, it'll be renewed and it wasn't, or vice versa. So I think we're done with this contract. So it falls off my schedule. And then I'm surprised when that late invoice comes in. Or the flip side is true too, right? Like they tell me, yes, we're renewing this contract at this amount, and then what they don't tell me is that actually it fell through in negotiation and we didn't end up, going for that. So now I need to sort of reverse the accrual that I set up. Right. So these sort of like renewal accruals is very common. And before, again, there wasn't a great way to handle that. But with software, you can have
Yeah.
renewal alerts. You can set up expected spend. You can automatically reverse things that fell through. Right. So there's a better way to handle a lot of these common pain points in these cycles.
And what does that look like when you're trying to improve your internal control, have clean audit trails? Because I can imagine if you're having these processes in place and being able to like have these alerts, I'm sure that it can help your internal controls as well.
Absolutely. Yeah. And I would say that's the thing we're driving at, right? Like we want to improve internal controls so that we have, completeness and accuracy and we want efficiency, right? We want to be done with close as soon as possible. So
Yeah.
if you're working from a central source of truth, right, a sort of centralized repository for your prepaid expenses, accrued expenses, with that audit trail where even the auditor can jump in, have read only access. They can pull everything they need for their testing so that you're not stuck trying to provide the auditor with the documents for their sampling and testing, which we know like is rough during audit time. Like this improves internal controls. This quickens our processes moving forward and gets us done faster, right? So it's very much worth investing in a new process like that.
There's a term you mentioned just a few minutes ago, the 0-day close. And I've had different folks who represent ERP systems who are connected to and they also say like, hey, our goal is a 0-day close. And I think the question I like to ask folks is like, is that even possible? Like it's a great in theory, but is it even possible to do a 0-day close? Especially, AI systems aren't like, you still need human intervention in there. And you can bring that down greatly, but is it possible to do a 0-day close?
Yeah, I think that that's what we're gonna find out, and that's
Okay.
what we're like approaching that, right? Like that that is what this automation is bringing us toward, is a 0-day close where the close is less, these like intense 10 days, and we're sort of moving with agentic, with AI. We're moving a lot of the tasks into the month, continuous. We're doing continuous reconciliation, right?
Yeah.
And all of that is documented and it's there in an audit trail. So I would say absolutely yes, it's possible. And that is where we're headed. And that is, at FinQuery, that's where we're headed. That's what we're building our automation toward with that in mind, because AI unlocks a lot of amazing possibilities in this arena. And of course, there still needs to be humans in the loop at certain, points in the process, of course, but
Mhm.
we're greatly reducing the time to close there.
Yeah, and some people would even call that like a continuous account or a continuous close where
Right.
you're closing almost every night because everything is up to date. And the only way we can do that is with automation and those tools helping us out because otherwise, it's not humanly possible to almost do that sometimes.
Right. Absolutely. Absolutely agree. Yeah, the possibilities are amazing with what we're seeing coming out recently.
Yeah, it's definitely an exciting time. So maybe somebody's been listening to this conversation and they're saying, "Okay, I'm in the grind. We're doing some automations. We're kind of getting there, but we're not quite there yet." And maybe you can kind of give them some advice, like, "Hey, tomorrow, tomorrow, this is the first step I'm going to take so that I can start on this journey to like have our operations work better in our finance and accounting teams."
Yeah, good question here. I mean, I think I would sort of mirror my own process
Okay.
working at FinQuery, which is, I'm on the product team designing a lot of our accounting automation. And when we're starting to look at something, Adam, we start with the pain points, right?
Yeah.
We figure out like what are the biggest pain points in this process and what do people want and how can we automate that and take away those pain points. So I think the first thing I would do again is sort of map the current state. Take a step back once you're done with your close, right? And think about what are the recurring things that I really don't want to do during financial close, right? And taking account of that and taking stock of that, and then looking at a FinQuery, looking at an AI first solution that has invested and done discovery around those pain points and those processes to automate that and get that off of your plate, right? And go see a demo, go sign up for a demo, go check it out and start to have those conversations with your leaders like, "Hey, I see an opportunity here to strengthen our internal controls, to reduce risk, to reduce time to close." And that I think is worth the investment. And even with these accounting standards that are coming out that are more complex, such as ASC 842 with leases, uh,
Yeah.
you know, even leveraging the complexity of those standards to go to leadership and say, "Hey, it's time for a new process. We can no longer be the last to know." Not with the complexity that just came down the pipeline, right? Let's be more proactive. Let's invest in something that is AI first and that can increase and strengthen our internal controls.
That's amazing. And as people are looking at possible softwares, whether it's FinQuery or some other AI forward software, are there things that they should be looking for in those softwares? Are there any red flags that they say, hey, this is something that you might want to say, you might want to think twice about if you see this in a solution?
Yeah, great question. I mean, reviews matter, right? People who have been using the
Okay.
software matters big time, right?
Yeah.
We've been at the top of lease accounting for the past 20 quarters on G2, which is like, something that we're really excited about and we take a lot of pride in. And, we care about technical accounting. We care about getting things right. And you can see that come through in the reviews, right? So I would
Sure.
definitely look at a G2, look at some reviews as you consider different options and bring some of your use cases to those demos, right? Don't let them
Okay.
just tell you about the software. Be like, hey, here's my problem. Here are the common things that I'm running into. What does that look like in your system? How can we automate this, going forward so that you really have a use case and a business case that you can bring to leadership related to relate.
Well, awesome. Well, David, thank you so much for coming on the podcast. It's been great chatting with you. And I know you brought some great insights that I hope our audience will take away and move forward and do amazing things in their accounting teams.
Absolutely appreciate the opportunity, Adam. Thank you.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.